The last time this much money moved this fast, the world lost $35 trillion in wealth. Now, the same pattern is back, only bigger, faster, and built on code that doesn't sleep. This isn't just about AI. It's about whether the US stock market is standing on a cliff and everyone's pretending it's a launch pad. The central questions are: how did this AI bubble form? What could make it burst? Could that burst trigger a new global financial crisis? And the most important one, who loses when the hype ends? Because this isn't just a story about technology, it's a story about money, faith, and timing. This is what we will discuss together in today's episode. I am your host, and this is the Intel Runner Plus. Please consider liking this video and subscribing to the channel. It's the free thing you can do to support us making this type of content. In less than 3 years, artificial intelligence turned Wall Street into a gold rush. From the end of 2022 until today, the US stock market ballooned by $27 trillion, climbing from $40.5 trillion to nearly $68 trillion. Tech giants rode that wave higher than anyone, especially the Magnificent Seven. Together, their combined value exploded from $6.9 trillion to over $20 trillion. The story begins like every bubble before it: exponential growth, a new narrative, and a collective belief that this time it's different. Startups always sell a dream, but this one sold, well, nothing. In February 2025, Mira Murati, former OpenAI CTO, launches her new company, Thinking Machines. No product, no prototype, no defined plan. At the investor meeting, one of them asked what exactly the company does. Her answer, quoted later by The Information: "We're doing an AI company with the best AI people, but we can't answer any questions." That's it. No pitch deck, no roadmap. And you know how much she got? $2 billion, a record-breaking $12 billion valuation for a startup at the seed stage, with nothing but the word AI. It wasn't a business model, it was a belief system. This isn't just startup madness. The entire US market is now built on it. Since October 2022, the S&P 500 jumped 90%. Sounds like a boom until you zoom in. According to Morgan Stanley and JP Morgan, the Magnificent Seven, Apple, Microsoft, Amazon, Alphabet, Meta, Tesla, and Nvidia, plus 34 AI-linked firms are responsible for 3/4 of total returns, 80% of profit growth, and 90% of all capital expenditure, meaning 450 other companies in the index are just spectators. So when people say the market is rising, what they really mean is AI stocks are rising. The rest, flat or fading. A $1 trillion illusion powered by 7 names and a collective refusal to blink. The promise was simple: artificial intelligence will make work faster, cheaper, and better. But data says otherwise. A major MIT study found 95% of companies using generative AI saw no improvement in profit. 95% no improvement in profit. And a joint Harvard-Stanford paper explains why. Employees aren't using AI to solve real problems, they're using it to create what the researchers call superfluous work. It looks polished, it feels productive, but it doesn't move anything forward. AI isn't saving time, it's wasting it beautifully. Even the industry's flagship, OpenAI, is bleeding cash. The company lost $8 billion in just the first half of 2025. 70% of its revenue comes from ChatGPT, but 95% of its 800 million users don't pay a cent. A $1 trillion valuation target built on free users and hype. Inside the industry, even the believers are whispering it now. We are in a bubble. That's not from a critic or a short seller. That's from Sam Altman, OpenAI CEO himself. According to journalist Alex Heath, who attended a dinner with Altman and senior OpenAI executives just days after the launch of GPT-5, Altman admitted that investors are caught in a wave of excessive enthusiasm around artificial intelligence. The Bank of England has noticed too, warning that the risk of a sharp correction has increased. Hours later, the managing director of the International Monetary Fund, Kristalina Georgieva, echoed it, calling today's AI boom a recipe for global slowdown if it snaps. And hedge fund veteran David Einhorn put it bluntly to Bloomberg, there is a reasonable chance of a tremendous amount of capital destruction in this cycle. That's the polite version of brace yourselves. If the AI bubble bursts, the fallout won't stop at Wall Street. Gita Gopinath, former IMF chief economist, estimates the damage. $20 trillion in US household losses, and another $15 trillion wiped from the rest of the world. That's $35 trillion gone, more than the GDP of every emerging economy combined. And unlike the 2000s and the dot-com bubble, the world today has fewer tools to fight back. Debt is higher, trade wars are active, confidence in the US dollar is fading. As Gopinath warned in The Economist, a market crash today is unlikely to lead to a calm recovery. There is more wealth at stake now and far less policy space to cushion the blow. And this leads me to the question of the episode. When this bubble bursts, not if, but when, what happens next? Does the US lead the next recovery? Or does it watch China and others take the reins of real industry while America counts its paper losses? Let me know your thoughts in the comments. This is the Intel Runner Plus. Please like this video and subscribe to the channel. It costs nothing but helps us a lot.